The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Welcome. This is Monday, April the 8th, and my pleasure to be here Monday through Friday. And, of course, having followed Steve Rhodes for this hour, straight after this, you get Larry Pesavento, great technician, another great technician, Dave White. No, Daryl Martin with his diagnostic trading out. Don't forget, coming to the Boston area, I believe it's May the 11th, Saturday, 4-hour free workshop. Look at the front page of TFN and check it out. Should be a fabulous show. Tom and Daryl together. What more could you want? And then, of course, Dave White and Tom O'Brien wraps it up 4 o'clock till 6 o'clock. And this is such a fascinating market. Over the years, this goes back a long time. I remember when I used to just go long the market. There was a period where I would take profits in stocks that had done really well and then try to get back in just because I thought, oh, the market's holding okay. I'm going to just try. And then in like 3 days or something, after being really patient and holding stocks for a long time, I'd find that I'm doing all this trading, getting nowhere, giving back some of the money. And unless I stepped aside, waiting for the next buy signal, it just cost a lot of money. And it was needless. But over the years, what I found was that that particular level, where stocks that look like they should be going higher, they give all the indications, and yet they can't get out of their own way. In fact, they slip a bit. Even if they don't go down much, they go down enough just to take out a very tight stop. And the stocks that should tank are not tanking. They're just not going down. It's at that particular point that I say to myself, okay, the market is telling me something. It's telling me just to step aside. And so for subscribers, we're in 2 short positions. And I tried a long position this morning on a stock that really should, everything was there for it to work out. Instead, it gave me a 1-point loss. 1% loss. Much less than an actual point. I think 38 cents or something like that. I'm not interested. I'm just gonna watch this for just a short while, because what I said to subscribers in my daily call, which is called the opening call, a very comprehensive daily newsletter, what I said was, if you're having trouble with the technique that has worked so well, then the market is saying, I am not ready to. I'm not ready to do very much. And I said to subscribers, I think the next 80 points, maybe 100 points, we could even be as little as 80 points, up or down, would be very important. And I'll explain that in a few moments. But let's just go to the numbers. The Dow's down 42 after a really strong comeback on Friday. It wasn't the comeback that says to me, okay, everything's all bets are off. We're now going back up and take off your short position on an index. No, it wasn't that at all, because the market did not come back to plus territory. That is a powerful move. But when it's like this, it says, still be somewhat careful. The weight of evidence says that we should be going down. The number of stocks that in the weekly charts even have started to look really topping up. I can go through them today. I'm going to try to go through a bunch of the IBDs. Top. We'll just take a couple of the top there. That says to me that it's silly to be giving out too much money, doling out too much money when you're in a kind of a high-risk situation. I think cash preservation, cash conservation is far better, because there are going to be some terrific buys coming up over the coming weeks. So the Dow's down 43 at 14,521. The S&P is down 1 at 1552. The comp index is down 4 at 3,199. Gold had a spectacular move on Friday, one we were fortunate enough to participate in. Now, what's going to happen? Well, this is very important. Gold's giving back $5. Silver's down 6 at 27.16. Gold at 1570, let's call it 1571, is intriguing only in that the pattern says, yes, there's enough energy to have a bounce. The bounce probably won't last all that long. Could be a nice percentage pop. Got to be somewhat careful, because the downtrend in the monthly chart is so strong. Also, there's a kind of a disparity between the gold and the silver chart. There was a moment where silver was acting better than gold, and gold is acting. Now gold is holding up way better than silver. I actually think they need to move together if you really want a powerful move, and silver looks to me like it's lagging badly, chart-wise, that is. Platinum's down 1 at 1536. Now, copper's at 3.36, up 2, having a very nice bounce. An important moment here for copper, because if it breaks down from here, that's not good news. And that will confirm what I'm thinking is that later on, sometime, it might have started. I'm not sure yet whether it started. But sometime we're going to get a pretty darn good pullback, and it's going to be an economically related pullback before we can have another spectacular move to the upside. Crude oil is up 22 cents at 19.91, and bonds are down 10-30 seconds after a really spectacular day on Friday, because the TLT, and let me just show you right here. If you're looking at Tiger TV, this is going to be important. I've got the E-minis up here. I'm just going to move them. I've got this as a peak F at 1568 as the MACD deflected low and the stochastic is acting poorly. Unless 1553 is taken out today, because 1551 is the 9-period moving average, you've got to consider this as a part of the consolidation. But there's a ChapmanWave Roman candle right there. That candle of Friday, if the E-minis, is the S&P E-minis, if they start to trade into the 1540, 1539 area, right now they're at 1547, there's a real good chance we're just going to go straight back to the 1533.25 low of Friday. If you close under 1533, 1529 is going to be really important, because that was the low back in the middle of March. And now let's go to what I wanted to show you, the TLT. Now, this is quite something. Look at the TLT. The TLT, at this particular point, the Lehman 20-year T-bond, 20-year T-bond fund. I wonder why I was going to say yard. I wasn't watching any football. So has made a doji D, huge gap up on a Friday. I'm always a little concerned about Friday gap ups. It's usually with stocks, but I'm watching this on the TLT because they often give it back. It's like a last moment, a last weekly thing, fund managers or whatever it is. But the stochastic's at 92%. I can't argue with that. And the MACD is still very strong. And it's a very strong leg A, a single leg up A in the weekly chart. Monthly chart says the level to watch really closely is to get over 123.15 and close over there, because that was the left side lip high way back in December of 2008. Can it do that? Well, there are a bunch of fighting chart patterns here. One is there's that falling axe formation, the one that's that expanding cone formation. So the TLT, if this Friday closes above 124.37, is at 122.64, the market surely will not have very much headway, and the yields will start to, as the price goes up in the TLT and bonds, so the yield comes down. So I just wanted to go through those things. Bunch of other stuff I want to do. I'd like to take calls. I'm going to go to Charlie in Atlanta. Hi, Charlie. How are you?
Good morning, Basil. How are you?
I'm very well, thank you.
I'm doing well, too. It's warming up here in Atlanta. We had
that's great. Yeah, here as well.
Mm-hmm. I'm looking at Google. I have it shorted from the 820 and 810 level, and I see it's going to be heading maybe to the 100-day at 750. But there's a gap in the January 2013 period. I want to get your opinion. How do you think this plays out?
Okay, this is what I'm looking at. Google, GOOG is the symbol, trading at 771, down 11. Yeah, folks, if the NASDAQ and the IWM, the Russell 2000, are going to be participating here, and if Apple, which is only up 1.5, is not giving much input into the action of the Qs, on the upside that is, that's just another reason to be really cautious at this particular point. That's number one. So Google had an 844 round number high way back at, that was on the 6th of March. Well, what was the 6th of March? It was also a peak D in the weekly chart. And now this is going to be the interesting thing for me. Are we looking at a potential hat-trick top in Google, a possible peak F at the 844 round number level? I'm going to type it in now because we've finished the month of March. 844 round number high. And I'm just for the moment going to keep it in this gray, in the blue color. I won't change it to red. I haven't got confirmation yet. Or is it going to recycle as it has? It appears it could, and go to a leg C above 844 sometime after this consolidation is concluded. That's my question, because I spent a little time on this over the weekend. Now look at this. You've got the stochastic at 86, but making a little M pattern here. You've got the MACD still very strong. And one of the reasons why I was asked about this, why I've gone to using, it hasn't worked out here. I'm going to just do that. I do want to look at the volume. So I'm going to, the volume average I'm taking out, remove. I'm putting a different volume in because I want to be able to see, right here. Give me 1 second. I'm going, volume, that's what I'm looking for. Just plain old volume. There it is. Volume. What color? I'm going to make it gray, and I'll make it even lighter than that. I just want to be able to see it in background. And the reason being, I'll show you right now, the reason is, I can't see it. Oh, it's right there. The reason is, lift it up, put it into there, say no axis, we're done. So the reason being, I want to see volume, but I want to see the histogram, the 0% line of the MACD. And that is declining a little bit, but it's still very strong at 11.95. So I wanted to do the monthly, and the reason being, if I'm about to get a hat-trick top in Google, of the stocks, especially the kind of social media, internet, high-tech area, then I got to be a little bit careful. So I've done all my homework. I want to just do a quick thing with the 120-minute chart, and I'm going to first of all say, congratulations, Charlie. That was a fabulous short that you got off. That's number one. And the second thing is, I'm going to do my homework, and then I'm going to ask you a couple of questions, and then we'll do what I'm anticipating for Google, and I'll be right back. Basil Chapman, Dow's down 44, and I'll be right back. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're on with Charlie in Atlanta. Charlie, hi. So,
Hi.
You got shorted. What did you say it was? 820?
825, 810, and I went down as low as 802.
Okay. So, do you have enough for two positions if you were to use one as a trading position?
I actually have 4 of them right now.
Okay. So this is the way I'm thinking. In my 120-minute chart, I just did a left side, right side price time match, and that says sometime by the 11th or the 12th of this month, Google should have, let me put it this way, if Google breaks 768, somewhere around the 768 support, then there could be a sudden quick slide, and that slide would be to the 746s, I think it is. 746s. So I want to go one step at a time. I don't like too many ifs about this because it's had 3 days of very strong declines. There has to be a balance here somewhere. So on a very short-term position, well, first of all, there is a possibility, and I have to say possibility because Google is going to be one of those stocks that fund managers want to come back to if they feel that there's any turnaround in the market because it's been very successful up until now. So this is what tends to happen in the fund business. So I want to make sure that there's a core position that you hold just in case through any rebounds or anything over the next week or two, there isn't a sudden punch into the, say, 795, or 791 to 792. What was the low there? Yeah, 791 to 792 area, trying to get to the 9-period moving average of 795, which is about another 27 points from where we are right now. 27 points. So what I'm looking at is in the core position, which I'd love, I'm sure you would love as well, love to see you be able to hold longer and deeper. There's a trading part of it that says we are getting really close to where Google should attempt, just let me squash this a little bit here. Yeah, where Google should at least attempt, and that's, oh, there it is. And that's right at the 767 to 765 area. So that's still at least another, good number of points away. So I'm thinking that if Google today closes somewhere around 775 or higher, then one of your positions, I usually like to think of it as the one that you bought last. In other words, the one that you bought lower down, that you shorted lower down, could be the trading position. And that says watch real closely, because if 785 90 is taken out, you could actually go towards the 790 area where the 200 period moving average is, and you don't really want to see it close above there, because it could suddenly have a much stronger bounce. So I'm going to make a suggestion that one of the positions that you have, because you've got a really nice gain right now, which is really unusual in Google because it's really been on a tear to the upside, is that one of your positions you take a much tighter buy stop, because that's the position that you want to put back on. If it was to bounce towards a 790, that's actually where you would like to put on a position. So I'm thinking that if you took some profits, if it bounced a little higher, maybe even to 775, 30, this is just my thinking. You could keep your core positions and just say, hey.
By the way, I'm on the same page you are. I just covered a little bit of Gulf. The 25% of it, and the 773. And my mind was saying, did I do the right thing, or should I be greedy and go for more? But what you tell me, no. I think 773 was okay. I could have gotten maybe a lower price, but
no. At this point, a few dollars makes a big difference between getting your money management plan in place and then suddenly having a little bit of a panic and then getting out much higher. You've got the meat of this thing, and that's fantastic. Now what I'm going to recommend is don't get excited. Just do your homework. Just exactly. I'm so pleased you did that before I even said, before. You didn't act on my word. You acted on your own. Now what I would say is, if it drops from here, that's fine. I've still got plenty of positions. But if it actually rallies and it starts to really struggle to get over 785 to 790 and hold, the moment it starts coming back down again, you could put that on, and that one could have a tighter stop. So that's not your trading position. Charlie, I have to congratulate you. Fabulous trade. Keep in touch. Let's see how it goes over the coming couple of days, okay?
Okay, thank you for your help.
Thank you very much. Congratulations. We'll be back with Mike and Mark. Folks, I'll talk about my San Francisco Marriott Marquis program coming up in a moment.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Just let me do this because I almost forgot about it. I will be in San Francisco Wednesday evening, San Francisco time, 6 o'clock till 8 p.m. I'm going to be doing a workshop presentation. Go to the front page of TFNN. Now, what we need to do, because it's getting close to the time, getting a lot of sign-ups, I want to make sure that I'm able to give the Marriott the number of people that are going to be there. That's number one. Number two is, because I did this at the last minute and there's a huge convention going on, and I didn't even know how they were nice enough to be able to give me a room, to be able to set up for me. That's all I'm getting is the room, and I'll have a projector, and I'll be able to show the charts, and there'll be chairs. So there's nothing fancy. I don't have time for anything fancy, and I won't have time to be at the door to sign everybody in. I'm going to have a sign-up sheet. You need to please sign up, go to the front page of TFN and sign up so that we know how many people are coming. It's really important. I'm sure there'll be some people coming in. It's a convention. There could be people coming in that I don't even know. But if you are going to be there, I'm going to be, just for fun, I wanted to have a special just a lottery for my CD introducing the ChapmanWave methodology. I'll be giving away one CD. That's a $249 value. And if you want to be in the lottery, I need for you, please, to come in and sign up because you need to be there until the end of the show. Anyone who's not there is not, it won't work out. And also, TFNN needs to have your email, because I won't be able to do anything. I won't have CDs there or anything. All of it's going to be done through the office. I need to get that out the way. I'm making it as clean and simple as possible. I want to meet you. I want to show some stocks. I want to show some trends. I want to talk about the tide of the market. Just a bunch of things that you only do one-to-one. It's like that. I want your questions you might never ask me, or no, but you're too shy to call and ask. I don't mind, whatever it is. So I need you to just sign up. It's an easy thing to just sign up so TFNN can let Marriott know. Thank you very much. So now let's go to Mike in Long Island, waiting patiently. Hi, Mike. How are you?
Good. How are you doing? Whole Foods. I have a short position in Whole Foods, which I've made some money in. My question is, should I add to the short position? There's a gap there, which I'm questioning whether that's going to be filled. So my question is, do I add to this short position, or what should I do right now?
The gap that we're looking at is this very big island reversal. It is just a whopper of an island reversal. Way back, the low on the 19th of July was 87.65. It gaps down and it plunges down to where the 200-period moving average. You see that pinkish line there, folks? If you're looking at my charts, this one here shows the daily. I squashed it a little bit. At 81.55 was 79.55. I'm sorry, was the low. And what does it do? It turns around and gaps up on some news, must be earnings report on the 26th of July, and that gap just stood there for a long time, and then all of a sudden, back in November, it sized to 85.70. Well, 85.70 is 87.65 was the low of the 19th, and the high of the 20th was 87, round number high. So it goes underneath, and it fills that gap. But the huge gap from back on the 25th, where it closed at 82.53 with a high of 82.78. Next day, it's at 88.83. That's the gap that's important to me. And what happens very often in a powerful stock like this was, it goes down to the gap, does not fill the gap, has another very strong rally, which is exactly what it did. And then what does it do? It turns around and it climbs all the way back to 96.93 from the 85.70 level. And then whoosh, it gaps down again. And that gap is not going to be filled for a long time. I'm not going to say forever, but that gap is not going to be filled for a very long time. Now, underneath it, I remember there was another gap from somewhere. There it is. There's a little gap from the 25th of November of 2011 with a low of 61 and a high of 62.25. And then the next, it gaps up and the low is 62.97. So there's a 40-cent gap around about 62.70 to 62.50. I'm not going to even talk about that one in the daily for now, but I am going to say that I spent a lot of time on this. I'm at fault. I'm sorry, subscribers. We nailed it once, and then I didn't get back in, and we've had some silly little trades with it. The core position, I think, is a short position, exactly what you've got. Now, there are two things that I would do. One is, I know that you're not afraid to do this. If you feel that the monthly tide has changed to the extent that it is going to go down and take out the doji candle, most important, April of a year ago, 2012, that high of 84 and the low of 78.81, which my eye says there's a really good chance that it's going to do. All it has to do is break the recent lows of 79.55 in the 79 area, and it's on its way down. I'm in your camp. So when you are looking for positions, obviously the best position was that failed H pattern, that the right arm extension at 87.47 around about a week or so ago. So if you do short it here, you need another sudden huge gap down to really feel comfortable. So my position would be this. You've got one position. The plan should be that if it goes towards the 84 level on a bounce and then starts to fail between $84 and $80, I'd say $84 and $85.70 maybe 86. I don't know if it can get there, but maybe 86 because that's the 9-period moving average in the weekly chart, and then turns around. That'll be a great opportunity for the next move down. Now, do you want to give away 4.5%? That is, in your waiting for that to happen? You know, in your position, I'm going to make it change the whole plan. I'm going to say, I would recommend that you nibble on another short position here. In your mind saying this is 2 positions. I want a starter here, just in case the market tanks in the next 2 days and really heads down. Whole Foods, WFM Whole Foods Market should do that. The world's largest organic food products. There's a lot of competition out there, and I've been looking at the Whole Foods that are going to the different cities. And they become trying to become more and more inventive, and that tells me that their game plan, their core game plan, might be not working out quite as they want it, and now they have to keep trying new things. I'm not sure. I've only been to a few, so they have hundreds and hundreds. So my thinking is start another small position, but this position is a 2-parter. The plan is to get in here, just in case it heads down right now. The plan is also to say, but you know what? It could pop up, and I'd even place another position at 84.25 as a second short position. You could make it maybe 84.70 or 85.10, somewhere in that area, knowing that it could go $1 higher, but that should be about it, and then it should arch over and it should come down. That's my thinking, because my monthly chart says absolutely sure that everything about it, the weekly and the monthly chart, peak F-tops in the ChapmanWave say you're going down, and it's going to be months of going down before it has a really good rally that can take it back into the 89, 92 area, if we can get there. I wouldn't be surprised if it's now going to struggle for a good 4 to 5 months. It's already had 1, 2, 3, 4, 5, 6. Yeah, it could be a year of working through this. I think you're on the right track. Congratulations on your short position. Think of this as a 2-parter, small position, and then add to it again on a bounce of 4 points or so. Hope that helps you.
Yeah, thank you very much.
Thank you, Mike. Now, you want to see it go quickly down to 79 on this move. So, Mark in Denver, you're next. Hi, Mark. How are you?
Good, Basil. How are you?
I'm very well, thank you.
All right, I got an itchy trigger finger here. I need you to help me out.
Okay, now you see how patient I've been? Folks, we're looking at CMG, another food area. This is Chipotle Mexican Grill. It's trading at $334, up $6. And what I said the other day to subscribers, we try to go short. We took I think it was a 3%, maybe almost 4% loss on this, which is very unusual. I made the mistake the very day that it was turning around of, instead of saying, hey, let's just get out of this now, we could even go long. I'm pleased I didn't go long, because the choppiness of this move is one that, did you see that spike down on Friday, down to 316? No matter how long I was, I'm pretty sure I would have been taken out for a much deeper loss, thinking that D was coming, and in fact it went down lower, and it's gone from 316 to 334. That's almost 20 points in just 2 days to the upside. So this is what I'm going to recommend. Look at my weekly chart. Folks, if you're looking at my charts, you will see right here that the middle chart, this is the white chart background. So I've got the left side, the daily, this is the weekly, that's the monthly. Monthly says that it's made a hat-trick top. I'm not going to say no chance, but I'm going to say there's really little chance that CMG is going to take out the high of 404.59 the week of the 20th of July, when it started that huge ugly candle to the downside, which was, I believe that was when we were down. We made 85 points on that move down because we were short. But the real issue here is that monthly chart says this is going to be a right shoulder failure pattern. That's the way my eye sees it. So I'm going to ask you, have a little patience. I can see the divergence setting up right now. There's a cup formation. As we speak, we might be looking at being within a day or two of some kind of a pullback, but as long as it's walking the 9-period moving average, as long as it closes strongly over the doji candle high of last week, and so far in 2 hours, 2.5 hours, 2.25, it's already trying to tackle the previous high of 334.89. I don't see that you're going to be missing out very much, because when it gets the turn, We're looking at a tidal turn. And the tidal turn says that to get that, you want the weekly, which is at 85% in the stochastic, and the MACD is still very good. You want the weekly to be giving you that kind of a signal that says, you know what, I've got the divergence that says it's running up without the power of it's got the momentum now, but you want to see that momentum start to lose as the stochastic pulls back, because that's the I call it the torque. Right. It still needs torque as well as momentum in this particular instance, and right now it's got it. So the daily is going to give me the clue, and then the weekly. I think have patience. Let's see. The candle I'm looking at is the high of 351.80 the week of the 21st of September. If it gets close to that, let's see how it handles it as a double top.
Okay.
But have patience. Look how much money you've saved by having patience.
Yeah, I didn't get in the first time. What's your daily and weekly count on this one?
I've got leg D, a brand new, very quick, and a very it's a cup formation in the weekly, in the daily, which says I'm in leg D, getting real close to some kind of a daily turnaround to the downside. It doesn't say it's short-term sell signal or anything, just a pullback that it has to start off with. That's number one. Number two is the weekly is an E. If it goes to a higher high, I'm calling it F. I might have to consider that it's a brand new B. I might have to take everything back and say, you know what? If it takes out that 351.80 area, CMG, folks, is what we're looking at. If it takes it out sharply, it's going to go into that whole bar, all the way to 390 to 404. I don't know. We're going to watch it, but I would have patience. I'm just, in a sense, I'm sorry that I did recognize that it had upside potential. I'm pleased that we didn't get in. I would have got stopped out, but I am sorry that I didn't recognize that it was a waste of time to short the stock, because it was walking the 9 EMA. That's what I like. What was I thinking? So
it just took out that 334.89 at the 335.50.
Yeah.
Wow. Okay.
Okay, so it's above that on the left side now. You see the 334.89. So just hold off a little bit, and we'll look at it together.
Right,
Thanks for calling, Mark.
Bye-bye.
Have a good day. Let's go to John in Philly. Hi, John. How are you?
Good day to you, Basil.
Yes, good day to you. You'd like to look at?
Yes, Basil, I'd like to look at silver. I can't help but notice down at the lows last week we got into the 26 and change level.
Yes.
We've gotten there. This is the fourth time now in the past year and a half.
Yep.
And besides getting to that level, what really interests me is something new. While we've been to 26 and change a couple of times the past year and a half, we've never come down and touched the 200-week exponential moving average, but we've done that here now. I wanted to see if
John,
that says anything to you.
John, folks, if you don't mind, I'm just going to break to the SLV, which is not quite the same because it doesn't trade overnight, but the SLV is the iShares Silver Trust. That hit exactly at trough E on the week of the 29th of June, right there at 25.34, and started a brand new move that went to A, B, C, and that was a C minus because it was way below the candle of the week of the 2nd of March, which had a high of 36.44. I'll tell you exactly what I'm looking at as soon as we come back. We got John in Philly. Don't forget, folks, sign up for my live free talk. It's going to be a talk and a meetup, really, in San Francisco at the Marriott Marquis, coming this Wednesday night, 6 o'clock till 8. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
It's Basil Chapman, Tiger Technicians. Now, I needed just to clarify a couple of things. One is that just a question. Yeah, it's California time. The meeting on Wednesday night, 6 o'clock to 8 p.m. California time, dinner time. And that's number one. Number two is, yes, it really does help if you, I've had some emails from people saying, you know, I'm only going to be able to sign in but we're not sure yet if we're coming, but we're pretty sure we're going to do our absolute best to make it. That's fine. We really need the numbers. I need to be able to tell them about chairs, etc. That's the second thing. The third thing is I've had a whole bunch of questions, email questions as well. I'll do the 3 o'clock to 4 o'clock hour this afternoon and try to cover those. And I will be here tomorrow. I'm going to do my best to be here on Wednesday. I'll let the office know if there's a problem, but it'll be in the morning, 8 o'clock to 9 o'clock in California time. So there we are. Now, John wants to know about the SLV. Let me run through a couple of things right now. I happen to have Dig up right now. Someone asked me about DUG in an email. DUG is trying for a bounce, but it could be a high-level consolidation in the DIG. I'll get to that if I have a chance right now. Otherwise, I'll look at it at 3 p.m. Now, what I wanted to tell John, who had some telephone problem, is that John, if you look at this monthly chart, actually what I'm going to do quickly is I'm going to go to the black chart. It's a little clearer what I wanted to show. The SLV is hugging the 200-period exponential moving average. I'm going to try, if you don't mind, I'm going to use the SLV because it just gives me so much more information than a futures chart, which if you look at it, you'll see there's a difference. If I'm looking at the K, you'll see there's a difference. I don't really want that. I want to go to the SLV because of the amount of data that I have. And the SLV is saying that the candle of last week, which is a ChapmanWave Roman candle, says that if it starts to trade at, it's at 26.29. If it starts to trade at 26.10 or lower, it's probably going to test 25.74. And that's what I said to subscribers, is that the GLD, look at that beautiful down channel. These narrow down channels in my work, when they break out to the upside, can give you a powerful move. It doesn't say how far it can go, but it's a powerful move. But we haven't broken out yet, and gold is a little stronger, you can see by the chart, than the silver. Let me go to the silver again. SLV, this is the Spider Gold Trust. Now look at the SLV, not nearly as strong. Silver tells me it wants to go lower, that it's probably going to retest the 25.34 area, which is going to be absolutely critical. If you're looking at the upside, I'd only be looking at a bounce, 27.62 to 28.40. So I don't like silver. You see the stochastic, you can see it better on the black chart. Look at that's flattening out. Look at the MACD, down. There's no strength here at all. It's a little different if you look at the GLD. Look at the GLD. It's already had a nice bounce, giving back some, but it's making a full complement of technical attempts to trade up. Now, the flat stochastic here is a tip-off to say gold better go a little quicker. And now look what I found. I forgot all about it. I got a little cycle date coming up about the 3rd of May. The week of the 3rd of May. Didn't realize that. That's a Fibonacci extension cycle. The last one was way back at the week of the 19th of August. 2 days, 3 days, 3 weeks at least before the top. So I'm looking at this and I'm saying both GLD and SLV. Your question was on SLV. My answer is that I don't see anything in SLV. And now this is the reason why I wanted it. I got so much more data. Look, the monthly chart says there's just so little chance that it's not going to take out 25, the level of support that's been there for a couple of years. I think it's going to take it out. If it does, it could go lower. I don't think it's going to 17, the 200-period exponential moving average, but absolutely the 24 to 23.5 areas is possible. So that's the SLV that I wanted to talk about. So, folks, thanks for being here. I'll be back at 3 o'clock. Stay tuned for Larry Pesavento. Stay tuned for Daryl Martin and Dave White and Tom O'Brien at 4 o'clock. And don't forget, sign up for the San Francisco show. And I'll be back at 3 o'clock.